The Nicholas Crypto Income ETF, ticker symbol BLOX, is a newly launched, actively managed exchange-traded fund that blends cryptocurrency exposure with income generation. It began trading in June 2025 and typically trades around $26 to $27 per share. The fund holds roughly $100 million in assets and charges an expense ratio of about 1.03%, which is higher than average but expected for a derivatives-based strategy. Its main goal is capital appreciation with a secondary goal of producing income from option premiums. BLOX does not hold direct cryptocurrency like Bitcoin or Ethereum. Instead, it invests in publicly traded companies and exchange-traded products tied to the blockchain industry. The strategy of BLOX has three major elements. The first is its equity portfolio, which includes crypto miners, exchanges, and blockchain infrastructure companies. The second is exposure through other exchange-traded funds that track digital assets such as Bitcoin and Ethereum. The third is an options overlay, which means the managers sell call options on positions they already own to collect premiums for income. They also keep cash in United States Treasuries as collateral to secure those positions. This method generates weekly cash flow while maintaining some exposure to crypto-related price movements. The option income is designed to make up the bulk of the fund's yield, which currently sits near 8%. Because the premiums depend on volatility, higher market swings increase payouts while calm markets lower them. BLOX distributes dividends every week, which is unusual for a crypto-themed product. The fund has become attractive to income seekers who want exposure to blockchain without owning coins directly. The top 10 holdings represent more than 70% of total assets, showing it is relatively concentrated. These include well-known companies like Coinbase, Riot Platforms, Galaxy Digital, and Robinhood, as well as exchange-traded funds linked to Bitcoin. Performance will largely depend on how those assets move and how effectively the managers handle their options overlay. The strengths of BLOX include its ability to generate consistent income, offer diversified exposure, and use active management to navigate volatility. It allows investors to participate in the crypto economy while collecting steady income. In periods of high volatility, the premiums earned from selling options can be substantial. The combination of traditional securities and crypto exposure provides a balance between innovation and income stability. However, there are also significant risks. The upside potential is capped because of the options sold. If crypto prices surge, the fund may miss large gains. The income stream is not guaranteed and can shrink when volatility declines. Sector risk is high because the portfolio is filled with crypto-related equities that can drop sharply if regulation or market sentiment turns negative. The fund is also young with limited historical performance, meaning investors cannot yet evaluate long-term success. High fees add another layer of drag on returns. Looking ahead, BLOX can perform well in a moderate or volatile market where option premiums remain rich. In a bull run, it will trail pure crypto exposure, and in a bear market, the option income may soften losses but not eliminate them. Investors should track its distribution sustainability and whether income covers potential capital losses. My meter rating is as follows: income potential 8 out of 10 because option premiums provide strong cash flow. Risk 4 out of 10 due to crypto and derivatives exposure. Sustainability 5 out of 10 since yields depend on volatility. Flexibility and execution 6 out of 10 for the active management approach. Overall, my meter rating is 6 out of 10, making BLOX a bold high-income choice for investors who want exposure to the digital asset space with some income buffer. If you have any videos you would like me to cover, say it in the comments below and I will break it down in plain English.